What's going on YouTube? Thank you for watching another video on this channel. What I'm going to discuss in this video is knowing your numbers as a business owner and why it's so important. Now you may ask, why is this information relatable to me? Well, as a business owner or even a person that wants to become a business owner, knowing your numbers is very important because it keeps you organized, it keeps you detailed, prepared, and disciplined. You want to be aware of what the money that's coming into your business as well as your expenses that's going out, and knowing all of the logistics of how your company operates. And even if you're looking at wanting to acquire another business, let's say you want to invest in a company, you want to be able to know the information that I'm going to go over throughout this video, where I'm going to talk about like gross margins. I'm going to go over net profit, the cash flow, customer acquisition costs. All of these different indicators are numbers that you can ask as an investor when you're looking at wanting to acquire a small business and invest in a company. You want to be able to know the information to ask them to see if it's a worthwhile investment. And if you already are a business owner or you're aspiring to want to become one, knowing these numbers is just going to keep you more precise and more intuitive when it comes to operating your business. What you're going to get out of this video is I'm going to discuss all of the main numbers that you need to focus on as a business owner and why they are so prevalent in the small business acquisition world. And I'm going to go over some other examples as well that can kind of help you put this together, so you can know when you're at home and when you're looking at other companies that you potentially want to invest in online. You can be able to look at the numbers of the company and be able to make an intellectual decision. So let's go ahead and get started. So one person that I feel that does great when it comes to knowing the numbers is Marcus Lemonis. He's a very good business acquisition investor. He has a show on CNBC called The Profit, and he always talks about companies need to know their numbers. They need to know their financial statements. And he makes investments on companies when the numbers look good, when the company shows that they have great cash flow, that they are making profits, that they have small to low debt. So let's go ahead and go over the first number that you need to focus on as a business owner. So one thing that you want to look at is you want to be aware of what the strengths, weaknesses, and opportunities are with your company. So when it comes to like your strengths, strong margins can be an indicator of a strength of your company, which you're simply just looking at the difference of the cost between the making and the selling of your product or service. A weakness for a company could be like if they have a lot of debt outstanding, if they owe a lot of suppliers, they owe a lot of banks. And opportunities could be more of understanding your owner's equity. Do you have owner's equity within your company, or a company that you're looking to invest in? Do they have a positive or a negative owner's equity? And that's simply looking at all of the assets of a company, whether it's the cash, the accounts receivable, equipment, and inventory, and minusing that by the liabilities, which is anything that's owed. So that could be anything such as money owed to the bank, employee salaries, or money that just needs to be paid to suppliers. So when it comes to knowing those numbers, it really keeps you grounded, and it shows where you may need to make improvements or areas that you're really strong in. So the first number that you have to know as a business owner is the annual sales revenue. Even when you're investing in companies, you want to make sure that you understand how much money is coming in, what's coming out, and knowing the net value between the two. The net value between your revenue and your expenses is simply your net profit. And this is going to really show you what your company is making on a month-to-month basis, and it's very tied to your cash flow. If you don't have cash flow with your business, you simply don't have a business. You want to make sure that you're profitable, that you have great cash flow, and that you're minimizing your expenses. Now, you also can calculate what's called a trailing 12 months, where you're simply looking at the last 12 months, you're evaluating what revenue you've made with your company. So instead of waiting all the way at the end of the year to do your annual sales revenue, you can do it from, it doesn't matter whatever month you're in. You would just start from the beginning of that year going all the way up to that current month. So it kind of allows you to keep the numbers at your fingertips and to always know where you're at and with your revenue. Now, another thing to keep in mind when it comes to knowing your numbers is you want to understand the times revenue method. So when you are looking at your annual sales revenue, you can look at that over a certain period of time and you can tie that to a multiplier. So if you're looking at receiving funding from a company, or you're looking at wanting to do a partnership with another business owner, you can look at your revenue and you can times that by a certain amount of years. So what I mean by that is that, let's say for example, you have a tech company that's valued at 3 times its revenue. All that simply means is that a company annual sales is $100,000, and if you're looking at a period of 3 times its revenue, essentially that company is valued at $300,000. Now keep in mind, it can depend on the industry and the economic environment, but a lot of times when you see companies that go on Shark Tank, or companies that are on a website such as Biz Buy Sell, where you can actually buy other small businesses, they are simply valuing their companies with a times revenue method, and they're simply looking at that formula. So that's definitely one thing to keep in mind. And another thing that you also want to look at is your margins. So like I mentioned earlier, your margins is simply the difference between the cost and the making of your product or service, and your gross profit margin is the value of your business. You want to evaluate how much it takes to manufacture your product, because there may be some disadvantages that you may have in your supply chain where you're spending a lot with your cost of goods sold, and therefore you're not making as much revenue. Or you could be a business owner that has a lot of that has low cost of goods, and you have a lot of good revenue. So simply, when you're trying to calculate your gross profit margin, you're simply going to subtract your annual revenue by your cost of goods sold. So let's say your annual revenue is $100,000. You're going to minus that, and let's say your cost of goods sold is $25,000. That in total is going to give you $75,000. Now that's your gross profit. Now, in order for you to turn that into a percentage, you're simply going to divide that $75,000 into the annual sales revenue, which is $100,000, and that's going to give you 0.75%. And it's simply what that is saying is that your company retains 75 cents from each dollar of revenue generated. So the gross margins are very helpful. It allows you to see the profitability of your manufacturing activities. And another indicator that you can look at is your net margin, where you would subtract not only your cost of goods sold, but you're going to also subtract your employee salaries, miscellaneous expenses, operating expenses, anything that you have within a company that is going out, in taxes. And this number is going to show you the overall profitability of the company as a whole. So you have one with the gross profit that's more focused on the manufacturing, whereas your net margins are more of the overall profitability. So it's good to have both of those numbers calculated and be aware of those specific indicators, because it's going to allow you to know the cost of what is associated with your business, and also the difference of what you're selling for that product or service. Now, the next number that's good to focus on is your customer acquisition cost. This number is very important because you want to look at how far your marketing and your sales dollars are going within your business, and you want to have a good understanding of how much it takes to acquire a customer. That way you're not overspending, or if you are overspending, you can find a way to find a equal balance, so you can bring in more customers if you're putting more money into your marketing. Now, the next and the last indicator that's really good to look at is the lead to client conversion rate. And this is simply the percentage of leads that actually turn into clients. So for example, let's say you have a software company and you present 500 demos, but you only get one client that actually decides to purchase that software, well, your lead to client conversion rate is less than 1%. So that's not good at all. So you definitely want to make sure that if there needs to be improvements, that you're making some adjustments, and it could simply mean that you may have to adjust the price of what you're selling for your product or service, or how you can differentiate yourself from the competition. So when it comes to being a business owner, you really want to know your numbers, because it keeps you organized and allows you to see how poorly or how well your business is going. Especially, when it comes to when you're looking at funding from an investor or a business partnership, they're going to ask you these numbers. So just to recap, some of the numbers that you want to keep in mind when you're either a business owner or you're looking to invest in a company is know your cash flow, know what's coming into the company, know what's going out, and know the net value of your revenue and expenses. You want to know your gross profit margins, where you're simply looking at those costs of goods sold of what you're manufacturing your product, and then the difference of what you're selling for that product or service. You want to know your customer acquisition costs, and then you also want to know your lead to client conversion rate to see how the percentage of those leads are actually turning into clients. So as always, thank you all so much for tuning into this episode. And if you can please like, subscribe, and share this video, that would be greatly appreciated. Continue to share this video with your family and friends, and also support the Patreon page, where I create exclusive content in the areas of finance, business, and investing. I have a Discord with my investment mastermind group, so definitely lock in if you want to be able to be up on the investments and know what's going on in the economy ahead of time. We definitely are dropping gems in that daily as well. Continue to look into tier 3 with the Patreon page, where I have one-on-one Zoom calls, and this is also included with the Discord, where you can be able to learn more about what it takes to get to financial freedom, what's your financial independence number, and how we can collectively work together with that, and looking at your investment strategies, looking at your cash flow, looking at eliminating debt. So I definitely have a lot of great tiers on there, so definitely support the Patreon, where you can learn more about me, and we can work together on this journey together when it comes to financial freedom. So I want to tell you all, thank you once again for tuning into another episode, and take care.